Hello friends, welcome to this March edition of Monthly Viewpoints. Geopolitics has taken center stage over the past few weeks, due to which we saw global equity markets going into a correction. However, with the Ukrainian President Zelensky saying that he is no longer seeking NATO membership, the door for negotiations has been opened. In response, global stocks have staged a rebound and are up 5 to 10%. Commodities, which had seen a sharp rally, have also seen a pullback. Brent crude prices have fallen back to $112 per barrel from as high as $130 a barrel. Gold, which is seen as a safe haven asset, has declined to about $2,000 per ounce from $2,050 per ounce. The US 10-year yield has also risen to 1.94%. If the war does de-escalate, investors will refocus their attention on inflation data and central bank moves. As of now, the Fed is expected to raise rates by 25 basis points in March and implement 5 rate hikes this year. For India, state elections, which was another overhang on markets, has also been removed. With the BJP winning the key state of Uttar Pradesh, policy continuity can be expected. Oil prices remain a concern though. While $80 per barrel is manageable, $120 per barrel for oil negatively impacts India's growth, current account deficit, fiscal deficit, and inflation. Higher oil prices will also pinch the consumer wallets and impact consumer discretionary demand. India, along with other emerging markets, has seen strong FPI outflows over the past few months. However, FPIs appear to matter less than before as the domestic flows continue to be strong. In February, net equity inflow, excluding arbitrage, was around 29,000 crores, which includes SIP inflow of about 11,400 crores. After the correction and a brief rally, Indian equity valuations remain above pre-pandemic levels at a headline level. However, a resolution of the Ukraine-Russia conflict, which can drive oil and commodity prices lower, should lead to a relief rally in Indian equity markets. Also, individual stocks have seen large corrections, providing an opportunity for bottom-up stock picking. In terms of sectors, Indian banks have appeared attractive on growth and valuations for quite a while. While these were outperforming the market since December based on the reopening trade, the breakout of the Ukraine crisis has caused the sector to fall sharply and underperform both the market and emerging banks. This may be a reflection of the macro risks, ownership, or large FII selling, but it sets up the sector for a rebound. Also, the hope of a cyclical recovery is contingent on better credit growth, and asset quality is also not a meaningful concern right now. We remain positive on the banking and financial services sector. As we have been reiterating, our outlook on equities for the medium term remains positive. Investors should continue the SIPs to maintain their equity allocation and use any corrections to add to the equity exposure. We provide a basket of funds for investors to choose from. Thank you and happy investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।